Hi everyone, today let's do a quick market overview, then we'll go over the economic calendar and the earnings calendar, then we'll go over max pain as this is the third week option expiration and there's already 3.5 million options in the market. Then we'll get into the charts and we'll finish up with my counts and positions going into the Monday session. Don't forget to check out the Patreon as well as the Twitter. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So Wall Street is currently rooting for bad news so that they can get their pause and potentially cuts towards the end of the year. Those bad numbers have actually been pretty hard to come by right now with unemployment hovering at record lows. They do mention here that the Michigan Consumer Sentiment Report came out much lower than expectations, 5.8% lower than expectation actually at 57.7, well below the mid-60 range. And their assessment of current conditions fell by 3.7% as well. So University of Michigan expecting some harder times coming. And they mention the fact that the jobless rate is still at 3.4% and that it's pretty unlikely that we're going to see cuts, at least until the jobs report is showing higher than 4%. And they mention that this is the lowest it's been since the 1960s. And coincidentally, the Biden administration presidential approval is at 37%, going back to the 1950s. So similarly, in time, the unemployment rate and the approval rating are back in the same ranges. Looking at inflation, however, we are starting to get some pretty good data. The 5-year inflation expectation is 2.14%, and the 10-year breakdown is 2.20%, so getting very close to that 2% target, which is good to see even if it's on a longer time frame. We also mentioned as a result of this, it's about an 83% chance that we get a pause in June. We've talked about the Fed futures multiple times, and it's still sitting in that range. They also mentioned that it's unlikely we'll get cuts below 4%, just like I mentioned earlier. Only 6 of the 124 Fed futures cuts have come when we had a sub-4 jobless rate. So it's pretty unlikely that we're going to get that without an increase in the unemployment rate. Moving over to the economic calendar, there isn't anything important on Monday. Looking at Tuesday, we have manufacturing PMI as well as services PMI and new home sales. Thursday, we have GDP, super interesting there, as well as pending home sales. And Friday, pretty big day with core durable goods, core PCE, year over year, as well as month over month. Then we have the headline numbers here at 8:30 as well. So headline and core, plus Michigan consumer sentiment for May. Moving over to the earnings calendar, there is still a couple of earnings that are interesting this week. We have Advanced Auto Parts on Monday, Lowe's on Tuesday, Intuit fairly interesting, Agilent, Zoom. And then Wednesday, we have the heavy hitter for the week, NVIDIA coming out after hours. Thursday, not too bad, Medtronic fairly interesting, Autodesk, Dollar Tree. Ulta Beauty's been fairly interesting, as well as Best Buy. And then on Friday here, PDD Holdings, as well as Marvel. Moving over to max pain for the third week expiration. This is the big one. We have already 3.5 million, almost 3.6 million options in the market. 2.26 put call ratio, so still a ton of puts in the market. Generally, I don't expect the market to go down when there are so many puts. 400, that high put strike, max pain here at 405, decent amount of puts at 410, and then we start to get some calls here as well at 410. The highest call strike is still that 400 at 77,000. So this will be interesting. Don't expect to get below 400. And realistically, I think 410 is probably going to be a pretty solid floor based on how many puts are here and how many calls are in the market. Not very many. You can see some here at 415, 420. But look at those numbers, 35,000, 41,000, compared to that 410 puts at 63,000, 70,000, and then the 400 here at 144,000 puts. So overall, expecting this to stay above 410 for the Friday close. Moving over to the charts, starting with the S&Ps here on the weekly view, you can see we got a step down, which is interesting. We're now below this major trend line and this trend support that I was watching. And this looks eerily similar to these first 2 weeks here in February. Going into that third week options expiration, get a big red week. And that does seem like what we're going to get here. Of course, we're still looking for that 410 closure on the week. So maybe we get a big wick early in the week and then we kind of rally into the close of the week. That would be interesting. We also have the 144 EMA here sitting at 4068. So I could definitely see a wick down to that level, maybe even down to VWAP at 4043 on the weekly chart. And then we get a little bit of a pullback into that 4100 area, closing the week with just a little bit of a down week. And then we get a little bit of a follow through on the week after. That would be interesting. And that's really what I'm looking for going into this third week option expiration on the S&Ps. Moving over to the daily chart, you can see strong support here at 4050. And we had a pullback into that zone going back to 2 May all the way here to 4 May. So 3 big down days, retesting this zone. And it seems like we're going to get another retest of that zone this week. Doesn't mean we're going to close this low. I still think we'll close above that 410 level. And you can see multiple wicks here to that 410 level. But overall, I do think this is bearish and that we'll see a down move early in the week, followed by that move to close in a good range for the option expiration. Moving over to the NDX on the weekly view, it still looks pretty bullish. We had a nice up week coming off of the 144 EMA here at 13,200. But I'll show you on the daily chart how that looked a little bit weaker. If we get below this trend line, then I would expect a retest of the 9 EMA here on the weekly chart down at 13,050. We've had a couple of wicks like that down to the 9 EMA, and I think next week we will get one as well. Momentum stepping down here, but RSI is still quite bullish. Moving over to the daily chart here, you can see that big hanging man candle, momentum stepping down here, RSI moving back towards the SMA, still in bullish territory. But overall, this is starting to look a little bit more bearish than it's been. We were rallying here. You can see we had that down candle, and then we came through with the bullish momentum all the way up until Thursday. And then on Friday, we stepped down in momentum, looking for this to pull back below this support line, and then come down and retest at least the 21 EMA on the daily chart, sitting down at 13,115. Might take us a day or two to get to that level, but overall, I think this is going to be pretty bearish. And zooming out here, you can see this other major trend line that I was watching, and it marked the top here on Friday, wicked that just barely, and then rejected from there. And like I said, I'm expecting at least a little bit of a down move early in next week, but probably a rally into the close of the week. Moving over to the Russell on the weekly chart, this looks pretty bearish here. So we have a much lower low on this feeble rally. And now we're getting negative weeks after touching that 9 EMA over the last 4 weeks. Momentum bearish, RSI bearish. So pretty much everything looks bearish here on the weekly chart. We could certainly come down here and get another strong wick rejection like we did last week, but we did close below my trend line, and I would expect this to come down and retest these lows either next week or the week after. But like I said, even if we do get a down move, you still could get a big wick like we saw last week. Moving over to the daily chart here, it looks a little bit less bearish just because we've been chopping sideways for so long. Maybe this lower area is going to hold, and you can see that move from last week where we had the island reversal, pretty strong bullish movement. But now we're starting to drop down. We're below the 9 EMA, we're below the trend, and momentum is bearish on the daily chart. So overall, still looks bearish. Moving over to the Dow here, we did end up getting a down move on the week, minus 1.11%. We're at the 9 EMA sitting at 332.92, so we're just above the 9 EMA on the weekly chart. If this breaks down, I would expect at least a retest of the 144 down at 321.83, as well as this trend line. If that starts to break here, then I'm looking to these previous lows down around 318. The wick low is down at 314, which coincides with this lower trend line. That is the big longer term trend line as well, so I would expect some support to come through at that level. But also be aware that if this area breaks, then you're looking at kind of a double topping pattern with this midpoint. And if that midpoint goes, then you have to be looking for some bigger down moves all the way down to 287.85 in my opinion. Certainly some support down at this previous low around 300, but I think this is going to be the low that people are looking for based on this double top pattern if it does come to fruition. Moving over to the daily chart, very similar thesis. We have the 21 above the 9 EMAs, but we're still bouncing off of this 55 EMA and the 144. So we're still trapped in this range. We're above the 200 as well. But overall, this still looks like it's going lower. Momentum, bearish. RSI, also bearish. But like I said, this trend line could definitely act as support, and I suspect that it will for at least this week. Moving over to comparisons, starting with the equal weighted S&Ps, with the regular S&Ps laid over top, you can see they were basically on top of each other going back to October of 22 all the way up until March of 23 here. Clear divergence from the equal weighted SPY holding up very strongly, testing its previous highs from January and February, whereas the equal weighted S&Ps look more like the Dow, starting to roll over below all of the EMAs and SMAs on the daily chart. Potential support here at the major trend line, going back to that October low and the lows here from March. So it certainly could hold in this area, and maybe they start to come back together. That would be interesting. But right now we have clear divergence, and one of these has to move higher or lower in the near future. Moving over to copper versus gold, with the SPY overlaid on top of it. We talked about this one a little bit in the Friday video. You can see just how disconnected we are here now. So this ratio is going much lower, quite fast. Gold is outperforming, copper is falling off very strongly, and the S&Ps are still holding up quite strong. You can see the S&Ps typically will move back to the copper versus gold ratio. We have the August high here, very overbought. We ended up coming back into this zone. We made some lows here in September and October, came back up to this ratio, chopped right in this zone here. And then from November, pretty much all the way until March of this year, we chopped right on top of the ratio. And then here again, we have a disconnection, SPY holding up strong, going quite a bit lower here recently. Moving over to transports with the S&Ps laid over top of it. We talk about the transports in almost every video. This is part of why I look at it. You can see just how correlated it is with the S&Ps, oftentimes giving us an indication of higher highs to come. So we were basically on top of each other all the way here until December. And then the transports started leading us higher, held up higher, and then the S&Ps followed. And then they were basically on top of each other here. Looking at March, the S&Ps actually led us lower, and then they synced up here again until 22 March. And then you can see that clear divergence, S&Ps sitting up quite high, transports looking weak. And overall, this looks like transports are going to go lower as well. Momentum is bearish, RSI also bearish, getting rejection off of this downtrend line. So overall looking lower down to this trend line at 221. But like I said, S&P is still holding up quite strong in this area. Moving over to the ratios here, we have the NASDAQ divided by the SPY and SPY divided by the Dow. NASDAQ has been outperforming massively. We're breaking out of this bullish flag. We're now at the 144 EMA. We'll see if that holds. Maybe we push up to 3.31. That would give us some more outperformance. My current thesis was that we were going to reject off of this area and get a little bit of weakness, but we have broken out from this previous high, so overall still bullish, watching this closely. We also might have a divergence forming, so watching that as well. If we go higher and get a higher RSI, then we'll be in good shape, but overall something to watch. SPY versus Dow also at a critical level, looking at this 144 EMA as well as the 1242 level. If this breaks down from here, maybe we see some SPY underperformance, but momentum is bullish and RSI still looking good as well. So SPY look to outperform the Dow in the next week. Moving over to the SPY divided by the equal weighted ETF and the NASDAQ divided by the Russell. I just want to give some perspective here on the SPY versus the equal weighted. You can see how overbought we are, bullish momentum, hugely overbought on the weekly chart. This is not to say that we're in a range that is impossible. We could certainly go a little bit higher here, maybe retest these highs from December of 21. But if we get to this level, that's going to be a pretty key indicator that we need to move lower, at least in the short term. This has been a huge run, very, very fast, coming off of a down move from December all the way until January of 23. So a multi-year down move here, big rally, looking for that double top at this level. So maybe a little bit more bullishness to come on this ratio, but I would expect a reversal at this very key level. And similarly here on the NASDAQ divided by the Russell, you can see we are at basically all-time highs for this ratio. All-time highs came in August of 20, and we're right at that area, and it's still going higher. So we'll see if we take this area out, or if we do get a rejection from here, that would be interesting. Moving over to the SPY divided by the M2 money supply, you can see this ratio is going low, and we're topping out here near the August highs. And that seems to be it. I did think we might come up and retest this next higher level, and that still could happen, but right now it does look quite weak. Momentum bearish just like the SPY. RSI still holding up fairly well, but overall I'm expecting a pullback similar to what we saw on the SPY. Moving over to Apple and Tesla, you can see Apple getting a doji on the week, completely unchanged. We're between these two levels, 176.12 and 170.98. And right now I'm expecting this to move lower along with the rest of the markets, at least early in the week, come down and retest that 170 level, potentially come down and retest the 9-week moving average down at 165. That would be interesting. I also have a level here at 167, so if this breaks, maybe we see a little bit of a down move in Apple early in the week. Tesla, on the other hand, I was kind of expecting this to come from this support line up to this upper bound, and that still certainly could happen. We're above this level of support, so maybe we get a little bit more rally here, but momentum is bearish and RSI is also bearish. So maybe we already got our test of the 177.70 level. Now we're going to come back through, re-break this midpoint on this double top, and then we start to come lower and retest this lower trend. That would be interesting. Obviously not all in next week, but that's part of my thesis going forward here on Tesla. Moving over to Microsoft and Alphabet, you can see Microsoft looking quite strong, still holding up in this zone, but we did get a doji and an inside candle, so maybe we see a little bit of a pullback. RSI is starting to pull back. We're also pretty extended from the 9-week moving average, so keeping an eye on this one. Alphabet, on the other hand, breaking out, looking super bullish, looking to retest this previous high up around 122, 123, in my opinion. That's the next major level of resistance. Certainly could get all the way up to 125, looking at these lows going back to February of 22. So super bullish here on Alphabet. Moving over to consumer staples and discretionary, you can see staples still hanging out in this zone right at these highs. I still think we'll probably come down to 75.40, test this area, and then maybe we get a little bit of a bounce. That would be interesting. But overall, definitely some weakness coming in, momentum starting to step down here on staples. Discretionary has been flat here for 4 weeks in a row. Tested the high, got rejected. Tested the lows last week and the week before and got a bounce. So overall, still looking slightly bullish. We're above the 9 and 21 EMAs as well as VWAP. Momentum, not super bullish. And RSI is also slightly bullish. Momentum starting to step up here, which is interesting. So seeing some bullishness potentially coming through on discretionary in the next week. Moving over to stocks above their 50 and 200-day averages on the weekly charts, you can see the 50-day average continues to retest this zone, starting to break down more here. Momentum finally stepping down in the last week, so bearish momentum. Need to get below that 9-week moving average, and that certainly seems like we'll get some follow through in the next week. RSI is now below the 50 line, but not below the SMA quite yet. 200-day average also showing bearishness. We've had bearish momentum over the last 2 weeks. RSI moving lower. This is a clear breakdown, retest, continuation type setup. So looking for this move lower, below 43.50, down to around 36.23. This is percentages here, so we have less than 50% of stocks in the S&Ps trading above their 200-day average right now, which is a pretty weak breath and usually leads to bearishness in the markets. Moving over to the dollar, this is one of the most interesting charts right now. We talked about this in the Thursday video, as well as the Friday video. I put this out on the Patreon and Twitter. The dollar started to break out, and now we have a clear move, 2 days of super bullishness, momentum moving higher, RSI quite strong. Weekly chart moving towards bullish momentum, got above the SMA here, so looking for some more follow through in the next week. We are at the 55-day moving average, so you could certainly see a little bit of a pullback here, but I wouldn't expect that to last very long at all. At this point, I would expect buyers to buy the dip, even if we get a pullback, and start to see moves up into this 103.64 level. And then above that, we have the 144-day moving average up at 104.19. It's also worth noting that we have the 22-week moving average at 103.016, very close to my level here at 102.98, which I definitely expect to get tested, which I definitely expect a test of this week. Moving over to JNK and TLT here on the weekly charts. JNK looking very weak, continues to make lower lows on the weekly chart. Momentum is bearish. RSI also bearish. I expect this to continue down next week. TLT, on the other hand, still quite neutral. We gapped down, retested this trend line. We're back in this middle zone. If we get below 103.70, maybe we see some more downside. But we've been in this area for weeks now, and I would expect treasuries to continue to hold in this zone based on the fact that we think the Fed is going to pause at the June meeting. Finishing up here with the VIX, you can see we got a step towards bullish again. It was still a bearish week, but we got a nice push higher before we got that rejection. And based on everything we're seeing, I'm expecting this to go higher next week, at least on a wick. We'll see how it all plays out, but right now it looks like we're getting a higher low setup and looking for some higher highs. Moving over to my accounts here, obviously none of my positions have changed from Friday. I'm still neutral, slightly bearish. I have a call here at 327 and 326 going into Monday and Tuesday of next week. I do have some puts on down at 321 and 322, but that's a 1% down move after the down move that we had on Friday. We'll see how that plays out. They're already in a little bit of a profit here, so I have no issues taking those profits early in the Monday session and starting to look for some down move early in the week. And then, like I said, I expect a little bit of a rally towards the end of the week to make sure that we get that good options close. Let me know what you think of the markets for this week. There's a little bit less news, but we do have the options expiration that we got to account for, so it could be an interesting one. Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.